Hello, everyone. Today I'm in Las Vegas, Nevada, and if you've been keeping up with the news any, you probably heard that tourism here has been down substantially, and not only in Las Vegas, but also in other major cities in the U.S. as well. And the media has been questioning why this is happening. Is it the tariffs that are keeping foreign travelers away? And that might be a small part of it. Also, another aspect to that would be, is it the higher food prices or the higher hotel prices? And that may be a factor as well. However, even a larger factor than those three are that we just had the worst month for layoffs here in the United States since the Great Recession in 2008, which was over 17 years ago. And that just happened just last month when we lost over 85,900 jobs, which were cut nationwide in August. And that was a increase of more than 23,000 more than the previous month in July when 62,000 jobs were cut. So the trend appears to be getting worse as more and more jobs are being cut. And not only was that the worst August in 17 years, but also the job creation numbers for the last several months are not that good either. In both May and June, they only averaged a net 17,000 new jobs added for each month in the entire USA. And those numbers were down substantially from a revised 147,000 and 125,000 net new jobs for both of those months. So basically, the labor department overestimated the net new jobs by over 258,000 for both May and June. And it's not very clear how this overestimate happened, as the Labor Department, that's their job. They're supposed to be keeping up on this and monitoring the labor market. But what we do know is that President Donald Trump did not like this news that over 250,000 jobs just vanished, and he did fire the secretary of the Labor Department. And regardless of politics, it's rather difficult to argue that something isn't wrong when you have to revise your statistics by over 90%, and that is just a huge number there. And the jobs numbers are rather important because businesses use these reports along with other data to make business decisions. And if the data is wrong, especially by such a large margin, then obviously a business cannot make accurate decisions. And with layoffs setting records last month in August, it is no surprise that places like Las Vegas have seen substantial declines in tourism. And as more businesses cut back, that will likely lead to higher unemployment numbers. The unemployment rate is currently at 4.2% nationwide, but here in Nevada it is a bit higher. It's at 5.4%. And both of those figures are likely undercounted, as following COVID, we've had millions more people switch to independent contractors. And if you're an independent contractor, you are not going to be covered by your state unemployment insurance. So there's very likely a lot of people not showing up as unemployed who are probably unemployed right now. And that, I think that's going to also be a major factor going forward. And if you look at where these record job cuts are happening within the last month, they've really been across the board throughout the economy in sectors such as retail, financial, software, as well as the pharmaceutical industry. So it's really been a broad group of companies. And according to the Warn Tracker website, that's a website which tracks layoff notices, some of the companies laying off workers include Georgia Pacific, Tyson Foods, Target, Microsoft, DHL, Ford Motor Corporation, JP Morgan, and Wells Fargo, just to name a few. So it's a very broad range of corporations that have been laying off workers. And also, some of these names are being hit by the latest Trump tariffs. For example, the Ford Motor Corporation took an $800 million charge to their second quarter results because of the new tariffs they have to pay on imported automotive parts. And now Ford is just one of the many companies that have been announcing laying off workers. And it's likely that the layoffs in the automotive sector will continue and might even worsen, as the $7,500 EV credit, which has helped automakers sell their electric vehicles, that tax credit is set to expire at the end of this month, which is just a couple weeks away. So that means automakers such as Tesla, which were already facing declining sales, and once this EV tax credit expires, that means that a new Tesla will be $7,500 more without the credit, and the same goes for Ford EVs, the EV Mustang, as well as other auto manufacturers, General Motors, and even the foreign manufacturers as well. So now we have this situation where the jobs market has just started to deteriorate, and not only deteriorate, but rapidly deteriorate. And also there's other not so good financial news, such as the housing market is not doing as well as it was. The price of housing is fine, but it's just the sales volumes are way down. And I believe that the current sales volumes for housing in the US is now down to levels not seen since the late 1990s. And the reasons for that have been, one, of course, the high price of housing, and two, the high interest rates. And that's a good lead into the Federal Reserve, which is going to meet later on this month. And their solution to both the deteriorating jobs market as well as the slow housing market is to cut interest rates further. And Wall Street is looking for a quarter-point interest rate cut later this month. However, given the situation with the jobs data, how fast the layoffs are occurring, as well as the weak housing, it's not very likely that a quarter-point interest rate will get either one of those two markets going. And then there's also other things going on with the financial markets, such as the across-the-board tariffs, which on the one hand might be good for the government as they are raising billions of dollars. I believe the latest measure from the governmental Import-Export Office has been they collected approximately $30 billion in tariffs in just the last month. So that's great for the federal government. However, at some point, it's very likely that these tariffs will also show up as higher prices for consumer goods, which will add to the inflation and will reduce the options that the Federal Reserve has to cut interest rates even further, as they don't like high inflation. They can't have the U.S. be similar to, like, say, Argentina, where we have 10-20% inflation every year, or for them it's probably like every month. And then we have more things going on, such as the weakening world trade. Farmers throughout the U.S. are already complaining that they're losing foreign countries, such as in Asia, such as China, as customers, and that is leading to a decline in crop prices, such as corn and soybeans. And there's been reports that farm bankruptcies may be picking up this year if that situation doesn't improve. And then, of course, we have the other usual problems, such as the high price of housing, as well as the high price of assets in general. The stock market is at record highs, gold is at record highs, other commodities such as silver is taking off. So this indicates that we are still in a bull market overall. However, what is not known is how long this bull market will continue if the jobs market continues to deteriorate as fast as it has been, not only with layoffs but also with the new job creation, which has also slowed down quite dramatically. And as we know, a unemployed consumer spends considerably less than one who is gainfully employed. So when we hear about tourism in places like Las Vegas seeing substantial declines, I think that is like the canary in the coal mine situation, and it's telling us that something else bigger is going on, something else is wrong, and that big something right now is the jobs market, which hopefully will get turned around. Um, might not happen with just a quarter point cut in interest rates. It might take a bit more than that. And not only will lower interest rates be an economic boost, but another big factor is the tariffs that President Donald Trump has been putting on imported goods. At some point, that should lead to some of the manufacturing jobs coming back to the United States, though that might not have happened just yet. That's yet to be seen. But what we have seen is that the federal government has collected substantial amounts in federal tariffs each month, and the stated goal of that continues to be to bring some of the jobs back, to help the jobs market. So hopefully we start to see that, and we shall see how this works out. Thank you for watching.